Welcome back, everyone. Today, we're diving deep into the U.S. stock market's performance on January 3, 2025, and what's likely ahead for the next workday. Whether you're an active trader or just keeping tabs on your portfolio, stick around. We've got plenty of insights coming your way. Let's start with today's performance. The markets kicked off 2025 on a cautious note. Here's how the major indices closed. The S&P 500 edged down 0.4%, closing at 4,680 points. The Dow Jones Industrial Average slipped 0.3%, settling at 34,250. The NASDAQ was the biggest mover, dropping 0.7%, largely weighed down by tech stocks. Investors seem to be grappling with mixed signals, lingering inflation worries, the Fed's stance on rates, and some encouraging data from the labor market. Now, let's zoom in on sectors. The energy sector shined today, with oil prices climbing nearly 2% after OPEC hinted at potential production cuts. Chevron and ExxonMobil were among the day's top gainers. On the flip side, technology struggled, especially the semiconductor segment. Companies like Nvidia and AMD saw declines as analysts raised concerns about chip demand in the first quarter of the year. Financials were mixed. While big banks like JP Morgan and Goldman Sachs held steady, regional banks felt the pressure amid ongoing discussions about stricter regulations. So, what's driving these moves? A few key factors: jobs data. The ADP employment report showed a stronger-than-expected gain of 210,000 private sector jobs in December. This is fueling speculation that the Fed might stick with its hawkish tone. Fed minutes. Investors are still digesting the minutes from the December FOMC meeting, which were released earlier this week. The message: rates could stay higher for longer to ensure inflation is tamed. Corporate earnings warnings. Several companies, including a few major retailers, issued profit warnings for Q1, citing rising input costs and cautious consumer spending. Let's take a closer look at some individual names that made headlines. Apple IAPL shares dipped 1.2% after reports surfaced about delays in its next-generation MacBook production. Tesla TSLA, a 3.5% drop as delivery numbers for Q4 fell short of expectations, reigniting concerns about demand in key markets. Ford bucked the trend, rising 2.1% thanks to strong pre-orders for its electric F-150 Lightning. Looking ahead to Monday, January 6th, here's what's on the radar. ISM Services PMI. Economists expect a slight decline from last month's reading, which could signal cooling in the service sector. Factory orders. This will give us more insight into business investment trends. Earnings reports. Watch for quarterly results from Walgreens and Constellation Brands. Their performance could set the tone for consumer and healthcare sectors. So, what should we expect for the next workday? Analysts are cautiously optimistic. Here's why. Stabilizing tech. After today's pullback, some believe tech stocks might see a modest rebound, especially if bond yields stabilize. Energy momentum. With oil prices rallying, energy stocks could continue to outperform. Retail focus. Given the upcoming earnings reports, expect retail and consumer discretionary names to see heightened activity. To wrap it up, 2025 is already shaping up to be an exciting year for the markets. While uncertainty remains, there's no shortage of opportunities if you know where to look. Be sure to tune in on Monday for another market update, and don't forget to hit that like button and subscribe so you never miss a beat. Thanks for watching, and we'll see you next time.